TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials up 96. You get the NASDAQ up 13. S&Ps are up 4. Gold contracts down 70 cents, trading at $1,325 an ounce. We have silver up 36 cents at $19.55 an ounce. Platinum's up $8 at $1,035 an ounce. Copper's up a penny and a half at $2.20 a pound. We got light sweet crude flat at $48.01. 10-year note down 2 ticks, 131.15. 30-year bond off 10 ticks, 169.09. Now, the notes and the bonds, folks, bottom line, they broke down September 8th and 9th, but they've made it all the way back topside, and they're trying to push into that level and get higher once again. So the notes and bonds coming back from the dead once again. That means higher price, lower yield. King dollar is up 13.6, 95.49. High volatility in the currency market out here today. King dollar had been up 400 ticks. It does have the volume, however. We've already done 17,000 contracts. So when you get to higher price and you give it up on price, but you have the volume behind the move, you go right back topside most times. So I expect you're going to see King dollar march forward once again today, next week. Euro. The euro is at $1.12, and the yen is at 101.31. We get over and we take a look at the SPY. What you have with the SPY is this. The SPY and the Dow Industrials yesterday trying to get into the September 9th gap. They failed. They came down. They came down with big volume. So bottom line is that this market, SPY, Dow Industrials want lower price. Right now you get the SPY up 89 cents. If we go take a look at the actual futures, we have window dressing happening out here, and I suspect that window dressing is not going to hold. Bottom line, you're up $5 right now. I expect you're going to see this S&P once again make its way down. What the S&P did and the NASDAQ did and the Dow did, they all went up to where it broke down. The market broke down from yesterday. You get a fast test of it. Coming to a Friday, I expect you're going to break down once again. I don't see any disaster, but I don't see markets being positive by the end of the day either. We go take a look at the NASDAQ Composite. So we have what the composite is this. The composite came back inside the lower range. We'll see whether it stays in there today. The lower range in the composite is 52.75. Right now you're at 52.85. Inside the 3 Qs, the number you're looking at is it was 118.03. We got below it. We're above it right now. We're at 118.29. Gold contract. What we have with gold is this. Gold contract, high volatility out here again this morning. Gold looks like it's just actually set up an ABC structure on the way down. Gold got to 1331. We're at 1325 right now. You've done 108,000 contracts, and how that would be set up is that you actually came down with volume. We went up and tried to get into the trading day from the 27th. It failed. You're going to have lighter volume. It's only a small ABC down, but 40. Well, you get to $23, a $23 ABC structure on the way down. Now the notes and bonds. These are tricky. So the notes and bonds that we have here is this. You're right into where we broke down from, and it's in there with some volume. So bottom line, it looks to me like this thing's not dead in the water just yet. And if we go take a look at the 30-year, the 30-year hasn't reached the September 8th high yet. And I expect what you're going to see, you're actually going to see it reach it. And that September 8th high is 171.01. Right now you're at 169.09. And good old King dollar. So what you have with King dollar is this King dollar surge forward. Has given it up on price. It's up 3 ticks right now. We got to 95.89. You're at 95.50. But I expect that, guess what? You are pushing into a swing. You're pushing with volume. That's saying that the King dollar does want higher price. So what are we looking at out here today? What we're looking at is that you get a market that's up 100 right now. The S&Ps are up 4. I expect those S&Ps are going to give it up, as is the NASDAQ and the NDX 100. This 10 a.m. update is brought to you each and every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Have a great weekend. Look forward to speaking right back here, 10 o'clock Monday morning.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.